Everyone thinks they've seen it all with Bitcoin. The booms, the bust, the sideways chops. But what's coming next might catch everyone off guard. Because Bitcoin's setup right now, it's not just technical. It's not just hype. It's a mix of fundamentals, macro pressure, and something nobody's really talking about. Psychological exhaustion. And when that breaks, it doesn't break slowly. Now, just to be clear, this isn't financial advice, and I'm just sharing what I personally see, how I'm thinking through it as someone who holds Bitcoin. So let's break it down. Right now, Bitcoin is sitting in a weird zone. It's not longer underground rebel currency, but it's not fully adopted yet. We got Wall Street buying through ETFs, governments watching closely, and retail investors still waiting on the sidelines. But here's the crazy part. While headlines are cooling off, the fundamentals are getting stronger. Hash rate, all-time highs. Long-term holder supply, near record levels. Institutional interest, only growing. And yet most people are sleeping. But here's the thing. Bitcoin tends to move big when the crowd stops paying attention. And if you look at the past cycles, it always gets quiet before the storm that gets ignored. When we saw it in 2017, we saw it again in 2020. Low volatility, boring sideways price actions, and then kaboom! The market moves faster than anyone reacted to. So what makes this setup different? First, the ETF inflows. Trillions of dollars now have an easier pathway into Bitcoin than ever before. We have BlackRock, Fidelity. We're not talking about crypto bros. We're talking about retirement funds, sovereign wealth institutions that used to call Bitcoin a scam, now build exposure slowly but consistently. Second, the macro backdrop. Governments are buried in debt. Fiat currencies are weakening, central banks are boxed in. If inflation rises again, or if they cut rates to save markets, Bitcoin stands to benefit either way. If there's a major shock, Bitcoin is now being seen not just as a risk, but as an alternative security. So that's a narrative shift that could light the next fire. Third, the halvening. Everybody talks about it, but here's the key. Supply gets cut, demand is growing, and unlike the last cycle, buyers this time are not flipping for quick profits. They're institutions, they're long term, they're not panic selling for 10% dips. That changes the game. Now, look, I'm not saying Bitcoin would moon tomorrow. No charge, no crystal balls. But when I zoom out, I see an asset with growing adoption, limited supply, and a system around it that looks more fragile by day. And that's why I think Bitcoin's next move might shock people. Not because it's dramatic, but because it happens while everyone is distracted, bored, or convinced the volatility is gone for good. So what am I doing? Personally, I'm not trading. I'm not overthinking it. I'm stacking what I can, managing risk and staying patient. Because these are moves, the real ones. They come when you least expect it. If you're not ready, you might miss them. If this helped shift you how you think about Bitcoin's next move, hit like and subscribe. I post daily content on Bitcoin macro trends and how to stay one step ahead in a system that's constantly changing.